Since Friday, VeChain's price action has moved up by over 12%. Is it now nearing its end of this rally and about to collapse, or is there more in the tank? Today, we're going to be taking a look at the price action of VeChain. I'll be sharing my thoughts and opinions on the kind of more larger macro timeframes, where I think the price action is heading in that kind of medium and longer term views. As I get into today's video, smash that like button. If you're new, subscribe, and let's jump right down into the charts and take a look at what's going on here with VeChain. So here we have VET paired up with USDT. We're on the 1-day Binance chart here, and we can see that we have rallied up quite a bit, but this area is actually quite concerning. But I am going to show you where things should go, but where I think they're actually going to go afterwards, okay? Because there are kind of like two possibilities here. Okay, so our typical kind of move would come right into this little pocket right here between 2.756 and 2.927. Okay, this area would also be an area of previous kind of resistance right up here as well. This is an interesting pocket, but I don't think it's likely to occur. We'll hopefully be wrong about that, and we'd like to see an additional surge to the upside. This would, of course, be another push of around 15 to 23%. So it's a very, very large move for VeChain, considering it's already moved 12%, right? But I don't think this is necessarily where it's going to go. I think there's going to be some resistance that is unfortunately going to hold and prevent VeChain's price action from actually getting that kind of traction. So what am I talking about? Well, I'm talking about this previous area right inside here that's really interesting. It ties right in line with this. If I pull this all the way across here, you can see that this is where our major areas of resistance are currently lying. So what you can see here, so if I go ahead and grab a yellow circle here, you can see all of this was support. We lost it as support just right inside here, okay? Although it was very brief, this loss, we kind of lose it, we can rally up, and there's a little candle right in here where we got rejected one last time before rallying, right? So this area was both support and kind of like a major kind of breakthrough situation. Then over here, we lose it as our support level, and then we kind of find it as resistance most recently just over here on the 8th of August through to where we are today. Now, the price action right now is also rallying right up into this area of previous resistance. So this is a major problem for VeChain's price action because we need to rally on through this range. This range, for clarity, guys, is 2.381 to 2.503. And this is where I think things are going to get a little bit tricky for VeChain's price action. It is possible that we just have a double top here, and that actually starts to be a bigger move to the downside. We want to rally up. We want to rally higher than the 50 SMA and the 50 EMA, but this barrier is a problem. So the bulls have a clear mission here to get VeChain's price action closed above that area of 2.503. Do that, and we're in a strong position to start talking about maybe getting some closed positions above the 50 EMA, the 50 SMA, and target out the 200 EMA. Because if we think about how much time this is going to take, it's going to be a few weeks or so. What are we going to see? Well, we're going to see this 200 EMA continue its journey down here, and it's going to come right in line with, of course, our targeted range. And during this period of time, we're also going to see some movements when it comes to the 50 SMA, the 50 EMA. They're going to kind of come through here and start to come on up. And you can see that this is potentially going to be a very interesting move for VeChain. That means that what we can see here is that if we can get a closed position above not only 2.503, but also the 50 EMA, 50 SMAs, that we could potentially then look for a breakout of this towards our 200 EMA and hit that targeted range. But there's a lot of ifs and buts in there because we have to obviously see this position, this resistance get broken through. The bears, on the other hand, know that they have control. This is a point of control. This is where the sellers have been historically, and this is where the sellers are trying to push the price back down once again. Now, if we take a look at the stochastic RSIs, they're also supporting the idea that we're going to get rejected here. Not that we're going to continue running, but we can see overbought on the 1 hour, 4 hour, 8 hour daily charts. This is an indication that buyers are exhausted and momentum's running out, and we're going to see a churn in the market and a pivot to the downside. So we want to be a little bit aware of that. The relative strength index is also pushing up, likely to find resistance as it has done previously on the 50 level. As you can kind of see right in here, we have all of these hidden bearish divergences historically that we are likely, in my opinion, to kind of continue to see. So we want to be aware that where we are currently is right back up into this potential range where the RSI is also going to get a bit of a pivot and a bit of a turn to the downside. Basically, momentum isn't really supporting the price action. Now, if we turn a look at the volume, you can see right in here, as we're pushing the price to the upside, what's the volume doing? The volume is decreasing. It shows weakness. So as we continue this move to the upside, entire run to the upside, the volumes are non-existent. It basically shows weakness in this move as we hit the resistance, as we are overbought on the relative strength, stochastic relative strength index, and of course the relative strength index coming up to that 50 level, which can be resistance as we have historically seen. I think that we're not likely to push past this area. So what's the opportunity here? Because of course, like everything, guys, no matter what it is, there's an opportunity to be had. And the opportunity here is going to be in dollar cost averaging, build out your positions if you're a hodler. And if you're a leverage based trader, it's going to be shorting with reasonable kind of stop loss. So let's take a look at what that looks like. In our charts here for Vechain, if we go ahead and actually just turn that, turn the right one on, wouldn't it? Would help. I'm going to turn the volumes off and bring the stochastic RSI back in and just maximize our chart here. So with this potential double top situation of forming for Vechain, we want to potentially think about going short. So I think we can put a short position right in at around the 2.437, that kind of range. I'd put the stop loss tight, just above the kind of 50 EMA, 50 SMA, and I would be looking for this next move to come down to a minimum of its previous wick low. I think it will probably go down deeper, but a trailing stop with maybe just furthering, take profits. But I'm a conservative kind of guy. I would only really be looking for a 1.5 minimum risk reward ratio, which puts us somewhere in that range of about 2.158. I like to complete my trades as quickly as possible. If I can repeat 20% profit multiple times, then that is much more lucrative in my opinion than trying to hope out that you get kind of a 1 to 200% move. Of course, leverage can obviously enhance that. So shorting it, I'd probably do something small personally, like 5x, 10x. I definitely wouldn't be looking for anything more than that. And of course, if I'm doing this kind of trade, I'm going to be trading on BitGet or Blowfin, which are my go-to platforms. There's links to those in the description if you haven't yet signed up for those accounts. I do recommend it because they're really easy to use platforms. So that'll be my approach. If, of course, we can get a closed position above the 50 EMA, 50 SMA areas, then that's going to be, in my opinion, the position to kind of go long, tight stop loss here, right underneath it, and target out that kind of area of the actual expectation, more towards that kind of 2.9 cent. Risk reward ratio, again, I'm only going to be targeting something like 1.5 because I'm really conservative about things, but you can see here that'd be another option to go long on the market, a little bit of leverage and gain some profit. Ultimately, once we kind of complete this upper area, if we can get up there, that is, the next big move is a move to the downside, because all of this is a part of a bigger play, which if we, let's hypothetically say we do rally up there as a bullish move, we're going to be looking for this mixed move to the downside. Okay, so although we've got some potential here for Vechain on the daily chart, I think we're going to see more continuation and inside of our kind of expected range. So for anyone who's kind of keeping up to date, this is the macro view. I've just zoomed out on the daily. You can see that this is the range that we've been talking about for a very long time when it comes to Vechain's price action. We're talking about the price of 1.560 on the low side to 2.698 on the high side. This is my dollar cost averaging range. This is where I think value is to be found for the VET token, meaning that whilst price is in this range, I think it's acceptable to be dollar cost averaging and building those positions. Now, I know that's not for everyone. I know that there's people who don't necessarily want to dollar cost average. They kind of want to throw everything at the market all at once. And it can be quite difficult because those particular types of individuals are looking for one price where they buy, one price where they sell. And that's very, very difficult. The dollar cost averaging approach, though, in my opinion, is better because it allows you to just throw money in the market as long as it's within the range. You know you're making decent value, as you think the appreciation is going to be there at a later date. So for me, anything lower than that range, as I said, of 2.698 is value. If it drops down lower than 1.5, it's not a problem as long as it stays above 1.318. If it doesn't, then it's no longer a wave 2 because wave 2 is not allowed to do that. And then, of course, we'll have to reassess the situation. But if I zoom out even further, you can see what we're looking for here. We're looking for 20 cents on the wave 3, which I think is highly likely, and then a bigger surge to the upside to talk about those bigger moves towards kind of that 70-cent range. So there's a huge potential here for Vechain, and that's only on the daily chart. If I zoom out of this onto a weekly chart, well, you can see things on a much better scale. So on this particular scale, you can see all of these interesting Fibonacci levels. For example, we have the 0.618, we have the 786, and of course we have the 1 ratio at the top here as well. Okay, these are all very important when it comes to understanding why I look to dollar cost average out of the market, because these are areas where I expect heavy resistance to be. So what do we have? Well, we have a 618. Okay, this is a psychological area, and price resonates with it all the time in price history. This comes in at 32 cents. The 786 comes in at 77 cents, and why I think there's going to be a push to this range. And this is my kind of conservative target. This is where I think the price action is going to go for Vechain. Between 32 and 77 is the area of expectation. I think it's going to be on the higher side of this, though. I think we'll probably get a small rejection on the 618 and then wave 4 down, wave 5 up into the higher 77 cents ranges. That's my kind of take on it. I don't think we're going to be rallying up to the 1 ratio, which will basically be 100% of what happened previously. That would be $2.35. As much as I want a $2.35 Vechain VET token, I don't think that's likely to happen. Not yet. In the future, possibly, tokenomics could change and all that kind of stuff. Who knows? But for now, I'm not expecting $2.35. What I am expecting is to be closer to the 77 cents range, and maybe even that 702 sat there at 50 cents. There's a huge amount of opportunity here and some great gains to the upside. If we take that into consideration from our low bear market that we had at 1.3 cents, if we get to the 77 cent range, we are talking 5,700%. If we get to the 50 cent range, we're talking about 3,700%. And if we can get to 30 cent, we're talking about 2,300%. These are not massive kind of mind-blowing numbers, not like we had seen previously, but they're very good numbers and very lucrative returns nonetheless. But that's kind of my take on Vechain's VET token at the minute. Let me know what your thoughts are on all of this in the comments down below. Where do you sit with Vechain on that kind of medium to long-term view? Let me know in the comments or join us in our free Discord server. And if you haven't done so yet, check out my second channel just up here where I talk through the Cardano technical analysis.